But let's shift gears, and it's V-Guard Industries. It's been nothing short of a pretty strong set of numbers, and V Ramachandran is the COO now joining us. Thank you so much for joining in on ET Now. It's been a 20% growth, and now that we're done with the summer, do you think that this kind of a growth rate or trajectory looks sustainable?
So I think summer has been favorable, right? So we have started with a strong quarter for Q1 this year, and I think March was also good, right? Because of a good and timely onset of summer. I think that the inventory is low, right? In the channel, and I do hope I think Q2 will also be favorable. Yeah. I think Q3 and Q4 will obviously, also depend on, how the winter season goes, because the winter categories, particularly water heater is strong, both in Q2 and Q3. Yeah. And, Q4 depends on next summer. But yes, I think, but however, what happens is a favorable start to the season is generally favorable for the year as a whole. So I think we have good reason to be optimistic for the year.
Right. But your company has been consistently reporting double-digit growth with 8 to 11% margins over the last 5 quarters. What's the outlook for FY25 and 26?
So I think two things, right? So the margins will get favorable. I think this year, because of a good summer, overall for the year, margins will be better because electronic category sales will be favorable. Yeah, that's, I think, one point. Second thing is we have been progressively working on landing the input cost increases, right, where there was a backlog over the last 1 to 2 years, and I think that we've made some progress in that area. And unfortunately, there have been further increases in copper, aluminum, lead, and oil derivatives, right? And we are working to cover them, and we've been working on them the quarter that went by, and we will be working on them this quarter also. So I think yes, I think our margin situation will get favorable, and we will get back to pre-COVID levels, and you can expect us to operate between 9.5% and 11%, right?
So the wire business was impacted on trade destocking due to softening of copper prices in June. Will this benefit the company, or will we see impact in Q2?
I think copper prices had very strongly run up, right? And even as we speak, copper prices are up at least 13-14% over same period last year. Yeah. And there's been a general uptrend. It's not just copper, it's there in aluminum. There is like 4 to 5% increase in lead. Yeah. And even the oil derivatives have gone up. Now, coming back to copper, I think what really happens is that, when prices go up, trade is aggressive in stocking up, and, trade tries to run down inventory when prices are coming down. Yeah. So I think there was a significant correction in inventory which happened in June, right? And fundamentally, I think inventory level in trade is very, very low. Yes, there could be further increase or reduction in copper, because this is really driven by market. We don't have much to say. I think what I could say that there may not be further erosion in wire sales, because the inventory in trade would have significantly come down, right? Because actually the demand is not changing because of the fluctuation in input prices, right? It's the trade inventory which is changing. And given the significant reduction in inventory in the month of June, I do believe going forward there is not room for further significant correction in inventory, because inventory is already low. Yeah. But yes, I mean, as prices go up and down, there will be some fluctuation in sales which will happen. But I think the inventory is already very low, given the kind of drop in sales which was observed by the industry and by us in the month of June.
Now, Sunflame has seen a decline in growth both on the margins front sequentially and on a year-on-year basis. So what's the outlook? Will it continue to remain subdued?
I think, as a general background, right, I think kitchen industry has been struggling now for about 6-7 quarters, right? And I think last quarter has also been challenging for kitchen industry. And probably you will observe as results of other companies do come, you will observe this struggle is continuing, right? So I think that's one background to this conversation. No, as far as the Sunflame growth is concerned, right? I think we are still putting in place particularly the organized channel, right? E-commerce, organized retail, yeah, CSD, CPC, canteens. These are areas where we are putting systems in place, and we are migrating the business, right, towards systems that vguard has in place to run these businesses, right? And these systems are taking a bit of time to land. A lot of them are also technology driven, right? And which is also why it is taking a bit of time. Yeah. So I think that's the second factor. Generally, quarter one is a weaker quarter compared to quarter two, quarter three, and quarter four. Yeah. And therefore, what I would say, the impact of lower revenue on the margins will be visible because of lack of operating leverage. I think last year to this year, I think there is also another factor which has played out. I think last year there was hardly any marketing spends. Yeah, I think this year marketing spends have got elevated to a reasonable level. Yeah. Now, as far as Sunflame performance is concerned, it's broadly in line with our own internal plans. Yeah, we had expected a lower margin this year because of lower sales in Q1, which we had projected. Yeah. So I believe Q2, Q3, as the festive season starts, yeah, I think we will see better results. Also, a lot of procedures in vguard we are putting into place in Sunflame, and because of that also, some issue with the timing of sales and all that is also happening. Yeah. So we're not very worried about Sunflame results. I think they will be better than last year, aggregate for the year as a whole. They'll certainly be better than last year, than aggregate level.
Right. What about the increase in mix from non-South regions? Where is it that you see this mix settling?
I think this year, of course, right, the non-South sales will cross 50% for vguard standalone. Of course, consolidated vguard, which includes Sunflame, will be significantly higher, right? That being said, we do expect to add 2 to 3%. We do expect to improve share of non-South by 2 to 3%, right? Because we believe that non-South will grow faster than South by at least 7 to 8% every year, right? So, or rather 6 to 8% every year, and that will translate into a 2 to 3% improved share of non-South. I think over a 4 to 5 year period, right, we should trend closer to 60% contribution, 59 to 60% contribution coming from non-South. We believe for our categories, right, the non-South contribution to the overall market should be in the region of around 64%. Yeah. So we will be, we believe at the end of 4 to 5 years, we should be pretty close to the national structure of South and non-South.
All right, let you go on that note. Thank you so much for sharing with us those updates. That's the management of vguard Industries talking about how they're going to improve the non-South region mix. The summer demand trends have aided Q1, and as of now, there is not going to be any further erosion in wire sales, with 9.5 to 11% margins expected.
If you like this video, then like, share and subscribe to ET Now.